Hello, this material is intended for those who have some experience in share market, who are not new to cash market, who buy and sell shares. It is possible you might have heard or seen someone dealing in futures and options on NSE. Futures and options are called derivatives because their value depend on or derived from an underlying asset. The asset can be a stock, index, currency, or commodity. I will take an example of Nifty index to explain the futures. Now, first, futures is a standard sized contract with a start and end date. The end date is also called expiry date. We will see how future market works. On NSE, futures trading is permitted on Nifty index and some more indices and about 120 selected stocks. The futures contract expires on the last Thursday of the month and a new contract starts on the following Friday and expires on the last Thursday of next month. For example, if you look at the Nifty Index Futures contract of April, the start date is 27th March 2020 Friday and the end date or expire date is 30th April 2020 Thursday. NSE permits 3 months of contracts at any given point of time. Hence, you currently have April 20 futures, May 20 futures, and June 20 futures. Current month futures are more active and has more volume than other 2 months. You may ask, what if the last Thursday of the month is a holiday? The day before Thursday, that is Wednesday, will be expiry day. Get used to the term expiry as it is used often than end date. You may ask again, what if Wednesday is a holiday, then Tuesday will be expiry day. You may continue, what if Tuesday? Well, let us stop there. Got the idea, right? If Thursday is a holiday, the preceding working day is expiry day. Following Friday will be a new contract month and called beginning of new settlement. Then the contract expires on the last Thursday of following month. In our example, expiry date is 30th April and new contract or settlement period starts from 1st May 20 and 28th May 20 Thursday will be expiry date. So far, you learned about a Nifty future contract, settlement period and expiry. You may also wonder whether you need to hold the contract till expiry. No, not necessary. You may settle or square off your contract any time during the contract or settlement period. In the beginning, I mentioned future contract is standard sized contract. Currently, the future contract size on NSE is 75 per lot. If the Nifty is at 10,000, the contract value will be 7,50,000, that is 75 into 10,000. You trade in futures one lot or multiples of one lot. So it is like one lot is 75, two lots 150, 2 into 75, three lots 225, 3 into 75. It goes like that. How do you trade in futures? Now, you understood about futures. Next thing is, how do you trade in futures? Future segment is different from cash segment. Hence, your broker should allow you to trade in this segment. So check with your broker first. In the cash segment, in the cash market rather, when you buy the shares, say 7,50,000 worth of shares, you would pay entire 7,50,000 to your broker. In the futures market, this works differently. You don't have to pay entire amount. Yes, heard me right. You don't have to pay entire amount. You pay part of the contract value, say 25% of contract value. This is called margin money. The percent of margin money may differ from broker to broker and for time period, intraday or not intraday, but it cannot go below than required by NSE. So for 1,87,500, 25% of 7,50,000 margin money with the broker, you can hold 7,50,000 worth of Nifty future contract. Other 75% of 7,50,000 you borrowed, also called leverage. Time to get into action. As you understood the basic stuff about futures, let us get into action. You contacted your broker and you have future segment now in your account. In addition to this requirement, you have say 2 lakhs in your account. First thing, when you look at the Nifty index, also called Nifty Spot and Nifty Futures, you will notice difference in value. Usually, Nifty futures are higher than Nifty by few points, or sometimes Nifty futures are lower than Nifty by few points. For example, Nifty is at 10,000 and Nifty futures at 10,020, described as Nifty futures at a premium of 20 points. Nifty is at 10,000 and Nifty futures at 9,980, described as Nifty futures at a discount of 20 points. You assess the market, think Nifty would go up, you have enough money with the broker, in your account with broker, to take a position of one lot of Nifty futures and decided to buy one lot. Say currently Nifty futures is at 10,020. You went ahead and bought one lot. Margin money taken 25% of 7,51,500, that is 75 into 10,020 is equal to 7,51,500. Margin money 1,87,875. Well, you're in now into the game. If the Nifty moves up, hence Nifty futures also moves up, whatever profit target you have in mind is reached. You will sell your one lot and profit is taken. What about the other possibility? Nifty has not moved up, but actually it went down. If you have not thought about it, now you are forced to and have to take the loss. So, when you enter into your trade, you have to plan for taking profit and taking loss, also called stop loss. Now, you will understand why on business channels, when experts give recommendations, the format is entry price, target price, and stop loss price. Always these three are given. It's a prudent trading practice. MTM, mark to market, gains or losses. When trading in futures, another term you need to familiar with is MTM, which stands for mark to market. So, what gets marked to market? Let us continue with the above example. One lot of futures is bought at 10,020. As price keep moving up or down or price fluctuates, say it moved to 10,030, that difference of 10 points, 10,030 minus 10,020 is taken. 75 into 10, 750 is added to your account balance. This goes on till the contract is settled or squared off. Now imagine these scenarios. At the end of the day, when market closed, Nifty futures is at 10,050. That is 30 points gain, 30, 10,050 minus 10,020, 75 into 30 is equal to 2,250. This gain is added to your account balance, even though you have not settled or squared off your position. Of course, the brokerage charges and taxes etc. will be charged to your account. This process is called mark to market or MTM. In this scenario, it is MTM gain or profit. Now, imagine a scenario. The Nifty future has gone down to 9,980. That is difference of 40 points, 10,020 minus 9,980. And loss is 40 into 75, 3,000. This is deducted from your account. You recall, you have not paid entire contract value to the broker, only the margin money. Hence, through the MTM, your account balance is continuously updated. Imagine further, you hung on to your position further, hoping Nifty futures will come back. Either you profit or break even without any profit or loss. But the Nifty futures price is falling, and as I said earlier, MTM is happening continuously. It may come to a point where all the money you have in your account may be used up. That is your 1,87,875 as margin money, and the balance 12,125, 2 lakh minus 1,87,875, and Nifty future value still falling. What happens now? Nowadays, with the help of technology, Clients' accounts are monitored real time by brokers, and risk management is their priority. Obviously, when entire funds in account are used up, they will inform you that funds needs to be brought into your account to make up for the shortage. This is called margin call. They may even scare off the position. You should be aware of their risk management policies. Also, it is prudent to keep some buffer in your account for any negative movement in the price of your position. That completes the cycle how future market works. I hope next time when you watch a business channel and futures are being talked about, you will be at ease with terms used in futures trading. Futures, spot, futures at premium, futures at discount, settlement, expiry, margin money, leverage, MTM gains losses, margin calls, etc. Futures trading has another dimension. Have you ever wondered about the difference between investing and trading in share market? Investing is you buy first and sell later, or buy, hold, and sell if you insist. If you buy low and sell high, you make a profit. In trading, also, you do that as you have just learned. Buying first is also called going long. That's the similarity. So, what is the difference? In trading, you can also do this sell first and buy later. How do you profit from selling first and buying later? You sell high, buy low. Selling first is called going short or shorting. The process is also fairly simple. USS Nifty is going down. You open order screen, place the sell order. As and when Nifty future moves down to price target, you buy the futures. This is also called covering the short. Real simple, is it not? Rest of the process is as discussed above. Thus, trading lets you to be in the market both in good times and bad times. That's whether market is rising or falling. Also, to profit from market movements on either side. And direction of market is not a concern. But in investing, you can only lose one way. You buy and price goes down, that is loss. In trading, you buy and price goes down, that is loss. And you sell, the price goes up, that is loss. So in trading, you can gain in two ways and lose in two ways. Please be mindful of that. I will end this talk on futures with few more lines. There are two things that I would like to impress upon about the market. First thing is your attitude towards the market. Have a look at the image carefully and objectively. Sumo is the market, and Kid is market participant or you. By any chance, you are thinking you are the Sumo, you need to reverse the roles very quickly. No matter how you feel about yourself, never get cocky or too flamboyant with market. Market is always supreme, it was and it will be. Be humble, else market will teach you, usually the hard way. Second thing is your attitude towards knowledge. You need to gain knowledge about markets, a lot of other things that can affect the markets. Read, read, read more and learn. Watch business channels, listen and learn. Every business channel has an app you can download to your cell phone. It doesn't have to be business hours. You can go through the news at your leisure. My name is Varaprasad and I am a CA. I invest and trade in markets, so I have skin in the game. If you like the video, please like it, subscribe, pass the word. I would like to do one on options. Thanks for your attention. Appreciate it.